Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for September the 27th, 2011. Now, to get started for tonight, we're going to be looking at the December S&P 500 futures. We're going to see a lot of volatility coming into the market again. We're hearing rumors of a possible bailout in Europe, more of the Fed trying to pump up his equity markets, and the reality is that we may get a short-term boost higher, but that's going to likely be very, very short-lived. We have a lot of ongoing problems here that are unlikely to go away. So the reality is shorting here would be the better play. Now, looking at this, we've closed at 1158.40. Some of our key levels: 1146.30, 1157.80, and 1168. So we've still closed below that key level of vantage point. Now, our predicted short, medium, and long-term differences are continuing to stay below that zero line. However, the short term is breaking higher. Our predicted MACD and our predicted TSI remain in a downward spiral. So, and we're somewhat, again, what I want to point out here is we are not even remotely oversold here. Plenty of room to move to the downside in my respectful opinion. So in short, what we're doing here for tomorrow is we're going to be watching these fundamentals. The volatilities, we're likely to continue to see these wild swings in the market, but clearly the primary trend here in the S&P 500 futures is down, as identified here by the Vantage Point software, dating back until the end of July. So effectively getting into the market just under this 1350 level, where you can see I have this small line drawn, the market has essentially just moved down. We've had a couple of retracements. We've come up and we've retraced up towards this double top in this 1230 area, and again a failure. But you'll notice that the triple EMA cross during this period of volatility never completed. It remained biased to the downside, even during extreme volatility, including the FOMC last week. Now, even with my own clients, it was a week ago from the FOMC that I advised to get in short and said, regardless of what the Fed states, the S&P 500 is likely to continue to move lower, which is essentially exactly what happened. QE3 may have had a minor effect on that, but again, it would be very, very short-lived. Now, going into our daily report for tomorrow, we're looking for, again, an entry point here. Tomorrow we have 1167.40 and 1131.60. That's the range. Now, your aggressive traders can use this 1167.40. Your less aggressive traders, what I would be careful of is that because of this volatility, we could push higher. Now, I'll point out this in a minute, what we saw today, the market breaking through that Vantage Point predicted high. So your less aggressive traders, they can hold out and keep an eye on the 1175 area. It's possible we could move up to that area in volatile markets. Now, again, if I look at the Vantage Point predicted high and predicted low for the day, we can see that this level is broken today. It broke above the Vantage Point predicted high, but it still managed to close back below that level. A lot of this rally, by the way, came at very, very late in the day, which is indicative of short covering. Basically, people closing out their short positions because they don't want to hold overnight, and that includes myself. I was short twice today, or 3 times today on the S&P 500, but I did not want to hold anything late in the day. Once London went home, basically, I closed out my positions right around 12 Eastern Standard Time. So keep an eye on this for tomorrow. But again, we are going to see some volatility. I expect it is possible in the days and weeks ahead that we could push back towards this 1231 area, but very unlikely. But again, we could very easily break through the bottom of this range without too much difficulty. So what we want to do here is just be mindful. Essentially right now, the range that I would look at playing is about 1230 to the 1100 mark, and the bias is clearly down. So that's our first position for tomorrow. Now, our second position is going to be in the Forex market, specifically the Australia-US currency pair. We're starting to become a little bit oversold here, so we can expect a bounce higher. Now we can expect to move higher here. So now it's really what we're looking for is an area in which to get back in short. Now this trade, I want to point out, very, very highly correlated to the S&P 500 futures. You would never do both of these trades at the same time. Just to point that out. Now looking at the key levels, 102.24, 1.0032, and 98.58. Now there is a possibility that this 98.58 level will hold, but I suspect we're going to move probably towards the 99 level. Now looking at our positions here, we can see that our short-term crossover is still moving aggressively to the downside. Our medium-term crossover is also moving down, and our long-term crossover remains to the downside, as does the triple EMA cross. Now we are getting into oversold territory in here, so we're looking for a corrective move higher to reset those short positions. Now again, the Australia-US pair is also correlated to this nonsense going on in the Eurozone. So we could see, if we see a boost in risk, we'll also see a boost in the Aussie dollar. So we have to be a little careful here. But remember, the primary trend right now on this currency pair for the last month or so has clearly been down. So looking closer at this, let's bring in the Vantage Point predicted high. How accurate has this been? Well, even during this rally today, we didn't get anywhere near the Vantage Point predicted high. It has been extremely bearish, particularly Sunday night. Now we've had a minor recovery back up into this 98.40 area into the close with the equity markets, but again, it looks corrective in nature to me. So bringing into the Vantage Point predicted high and low into this for the day, we can see the neural index is up after 5 straight down days. So a minor corrective move is perfectly normal. For tomorrow, we're looking up at around the 99.19 area. Then we're looking for a substantial move lower down into the 97.44 area. This will be dependent on that S&P 500 moving lower. If the S&P 500 starts breaking higher, then that's going to put strength into the Aussie-US currency pair. So we have to be a little bit cautious tomorrow around that. But for tomorrow, I would be looking at around this 99.19 area to get into the short positions. So with that said, these are the market positions for September the 27th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.